First of all, I want to say thank you, Danny, and the rest of the staff that have worked hard to put this together. I remember when Danny gave that message a couple of years ago, and I remember seeing the response and hearing about the response, and I was moved by it. And just to give you a little bit of background about why this became such an area of interest for me, many of you know my wife, Beth. She was the director of women's ministries here from 95 to 2000. And we met in this industry, in the insurance and financial services industry, back in 1980. And one of her passions was talking with senior adults about long-term care and helping them acquire insurance for that purpose. One of the odd things in life that happens is sometimes the paradox is just, too challenging to believe, but here's what happened. Here's our story. In 1998, Beth was diagnosed with MS. So here's a gal who's selling long-term care insurance that can't buy it. At the time, the industry was fairly young, and she was too young to purchase it. You had to be over a certain age before you were even offered the product. So here she was, had a passion for the product and the process, and because of this diagnosis, she wasn't able to get it herself. So trying to figure out, well, should we have this kind of an issue in my family, what am I going to do? So this quickly became a passion for me, as I've shared with Danny. We did talk last year about a program like this. So very pleased you're here. I just want to say thank you to Danny and the staff again for your vision and putting this thing together, because it's really, really important part of the process to effective financial planning. Okay, with that said, my goal today is I get to talk about insurance. How many of you are excited? Come on, you don't be shy. You can raise your hand. There we go. I got one. She must be an agent. 2. 3. Okay, here we go. Well, I don't like to follow the script too much. I mean, I'll use it as an outline, but one of the things that I've learned over the years is there's a lot more than one way to skin the cat, and there certainly are many, many options today with long-term care planning. And from a legal standpoint that Stephanie talked about, and from the pre-planning, I think that Doug talked about, and Amy with the Cameron Group talked about getting ahead of this thing. And probably the most important word that I can communicate to you is don't procrastinate. There comes a point in time where your event becomes an event for your family member. And I can promise you, if you're not prepared, they likely won't be prepared either. So that would be the one thing that I would, if I were to, all the speakers so far, I've heard them talk about planning and being prepared and so forth. That's a word to not procrastinate. Congratulations, you're here. I suspect you're probably not procrastinators, so congratulations for that. But my goal today is to talk about a few things that you may not be aware of that have changed a great deal with regard to ensuring your long-term care risk. So with that, Derek, let's go ahead and go to the next one. All right, let me ask you this question. In retirement, what's more important, having assets or income? Both. It'd be nice to have both. If you have assets, you might have income. If you had to pick one or the other, probably be income, right? Why? Because income is what pays for everything. If you want to advance it. Go ahead. Yeah. So it speaks to lifestyle and standard of living and so forth. And so what I can tell you is, I used to, in some of the classes that I've done on retirement planning, when we got to the long-term care section, I'd ask this question: what if you had a long-term care event and you had the misfortune to recover? Think about that. Is the expense associated with long-term care, whether it's home care or in-facility care, is it inexpensive or is it expensive? It's expensive, okay? So if you had a care issue for a period of time, how might that affect your retirement, either assets or income picture going forward? So insurance is a very useful tool in that process, but essentially insurance, I want you to think of it this way. Instead of as an expense, I want you to think of it as a standby source of income, because the insurance is designed to generate a flow of income to offset the expense associated with medical care. Okay? That's really what it's designed to do. That analogy would hold true if you bought life insurance and you had dependents. You're married and you have children. What do you want the insurance to do? You may want it to pay off a debt, but certainly you want it there to replace what? Your lost income if you pass. So that's really what insurance is designed to do. So we'll talk about some of this here in just a second. So Derek, if you go to the next one. What expenses could exceed your income in retirement? And the next one is inflation, market downturns. We've seen a couple of those in the last few years, haven't we? Healthcare expenses, especially extended healthcare, long-term care issues. Medicare doesn't do a good job of paying for those things. It's very limited, and so it's not a particularly great option for most folks, except for the first 100 days, if you can get all 100 days. So what is extended care? It's also referred to as custodial care. It simply means that you need somebody to help you or to observe you doing functions of daily living. There are 6 of them that they identify to determine for insurance purposes whether you qualify for a benefit. But often custodial care means that you need somebody there, like a nurse or somebody to help you remember to take medication or apply medication or those kinds of things. Okay, the next one. And it requires assistance for the activities of daily living that I just mentioned. It does not necessarily mean that you're going to go to a nursing home. Most people prefer to have care delivered in their home today, and that's where a lot of the care goes. But I will tell you that as inexpensive as home care used to be, it's quickly getting more expensive because there's a greater demand for it. So go ahead and go to the next one. Okay? All right. So what is it practically? Care that provides the ability to live out the last phase of your life as comfortably and with as much dignity as possible. Derek, if you can go to the next one. The next 2, consequences of being unprepared. Okay, what are the consequences to your spouse? Many times, my next door neighbor, well, I'll get away from the microphone here. My next door neighbor had an event like this. Had a very odd form of dementia. I'd never heard of it before. And it was a type of thing where very intelligent man. He was the chairman of the physics department at UCF for many, many years. His wife was a math teacher. Why my kids didn't understand math going through school, I do not know why. But they certainly could have helped, and they tried. But anyway, he had this dementia that he didn't even know he was aware of, or not that he was aware, he didn't know he had it. And what happened, what predicated this, is he drove his car off of 436 into a ditch coming back from the airport. Pretty significant accident in terms of injuries to them. And she went into rehab in a local place here in Orlando. They sent him to Texas because of the rehab that he needed. Well, during that process, he physically recovered over about 10 months. But mentally, something was different. Something was significantly different. To the extent that he could understand conversation that I would have with him or that anybody would have with him, but he could not respond. He had a blank stare the entire time. He was not a big man. He was probably that tall, maybe 5'8", 5'9", 165 pounds maybe. His wife was a little wisp of a thing. And if she was 110 pounds, I'd be surprised. So the reason I tell you this story is I know on her phone, I was on speed dial. Anybody have any idea why? What's that?
Pick him up.
Yeah, pick him up when he fell. She couldn't do it. They were 70 years old. She was itty-bitty. He was a little bit larger, but there was no way she was going to pick him up. So the difficulty that faces a spouse can be physical things like this that over a period of time can result in their own diminished health capacity, and so forth. And then you get into, what about the children? How many of you have children that live in other states? Might it be a burden for them to try and help you conduct your affairs from another state? Of course it would. Or even if you have someone here and maybe someone not so close, do you think there might create some friction between some family members that tend to stand in for care because they're local to you versus someone that's further away? These are real issues that happen in families when these types of events take place and you haven't taken steps to prepare for it, okay? So I don't want to belabor that too much, but it is important because it does happen. It does affect folks. Derek? Okay. I want to skip over to this this chart. If you come, we're at table number 25. What I put in here, I found this mind map in a book I was reading on the topic, and I've got copies of this at the table, so be sure to pick one up. But these are some of the things, certainly not exhaustive, but some of the things that will run through someone's mind when they have to deal with this event in a crisis, which many times it is. To the extent of, do we have a will? Has it been updated? Who has our power of attorney? Who's going to stand in and write checks for us on our behalf if we're not able to do it ourselves? Who's going to take care of the dog and the cat? Do I have a preference for facility? What about a medical document that says what kind of I just lost my train of thought on that. You know what I'm talking about. It's a living will. Those kind of things. So this will help you to start to see the things that people have talked about they've had to deal with in the spur of the moment. And so I would use this as a part of your planning tool to say, okay, I'm going to go through this and I'm going to try to get answers to all these things. And what you'll find, I think, is that one prompt will lead to another thought that will be specific or unique to your family or to your circumstances. And it will help you to put together and be more prepared for this kind of an event should it occur. Okay? So that's why we put it in there. Okay, consequences of being unprepared, if you go to the next one. How much time do we have? 10 minutes? Okay, I'm going to give you a little background. I'm going to stop right here with this, but I'm going to give you a little background of what's going on in the industry insurance-wise, just to help you see how many more options there are today. How many of you are familiar with traditional long-term care insurance? All right, good. How does it work? I heard the word terribly. Well, I can tell you this, it pays claims really well, but what do you, when you say terribly, what are the things you don't like about it? It's costly. Go ahead, shout it out. I'm very interactive. Waiting period. I have to wait, right? Often I have to extend the waiting period to make it affordable. Okay, what else? Anybody got a rate increase? Uh-huh. I can tell you I haven't counted lately, the number changes pretty frequently in the last few years, but there are a number of companies that have had rate increases in the range of 40%, and then they quit selling it. So what's going on in that industry? If you've experienced the rate increase, if you've experienced the long waiting period, it's like your homeowner's insurance. You're glad you have it if the roof blows off, but you really don't like paying the premium. That's kind of what long-term care traditional insurance has looked like. Would you agree? Okay. So if you could change some of those things, what would you change? Well, people have told me, well, I'd like to know that my premium can't go up. That'd be nice. And I'd like to know that if I never use the stuff, that there's some benefit that goes to my family when I pass away. Okay. We're going to fast backward and then fast forward. In 2006, there was a bill attached to a pension and retirement bill. And it was called the Pension Protection Act. But in the back of that bill was attached some legislation that had to do with updating what people could use for long-term care expense payment. The law took effect January 1st, 2010, and here's what we found. A lot of people would have assets that they might draw a circle around and say, well, I've got this CD in the bank, and if I ever need care, I'm going to use that to pay for my care. What's the problem with that? You earn any interest on your CD? No. So would inflation maybe affect the purchasing power of the CD? Sure. What else is a problem with that? $1 for $1. If I have $1 in my CD and I want to spend $1, that's all I got, right? So part of the legislation said that if you as an individual have an asset like an annuity or life insurance, you can advance the proceeds of those policies to pay for care on an income tax-free basis. Wow. How many of you knew that? Not many people know that. So let's say you had an annuity you bought years ago for $100,000. It's now worth $200,000, and then you're going to use this to pay for care. Without this legislation, when you take a distribution from that annuity to pay for your care, part of that distribution is going to be income taxable to you. Well, but Kevin, I've got a medical expense that I can offset. Maybe you do. If you itemize and you have the right percentage, you can do that. But that wouldn't be the case for everybody. So the legislation said if you exchange the old policy for one that has the new language in it, all of the distribution for long-term care is income tax free. Wow, that's pretty cool. What about the life insurance side? Life insurance policies for years, I actually sat at the table with a guy he was the president of Prudential Canada about 25 years ago in an industry meeting. And he's the guy that came up with the idea that you could advance your death benefit to pay for a terminal illness. His idea, widely used in the industry the last 25, 30 years. Somebody else came up with the idea that said, well, what if we were able to do that and use my death benefit now to pay for my medical care, my long-term medical care? That is included in that legislation. So the difference between the CD, for some people, it might make sense to say, well, I'm going to get the insurance policy. Maybe I'm going to transfer the CD money into the insurance policy. And what do you know when you buy life insurance? If you put $1 in, how much insurance do you have? More than $1? Typically in these plans, it's two to three times as much money that's available for care that you can advance. So what does it do? It answers the question, I don't have a premium, and whatever premium I do have is guaranteed. If I never use it, what's going to happen? I pass, and it's going to be paid to a beneficiary, income tax free. And I still have any cash that's in there available to me if I need it for any other reason. Some of the other changes that are not insurance related, this I thought was a pretty creative thing. It's a group out of Sarasota that I've gotten to know. And basically what they do is you can buy service hours, 500 to 1,000 service hours. So you pay you write a monthly check to them. It's not medically based, so it's not determined whether you need assistance with two or more of your daily activities, like remembering to take medication and transferring from the bed to a chair and that kind of thing. It's not dependent on that. It specifically has to do with things like you need assistance in the home doing your laundry or going places and so forth. You could buy a certain number of hours. And the cool thing about that is that if you buy the hours today, if you buy 500 hours today, and let's say the average rate is $18 an hour to pay for care in the home, as the price of that care increases, maybe you don't need it for 5 years, and now the cost of care is $23 an hour. It covers that because you bought the hours. Isn't that pretty cool? So there's a lot, my point is that there's a lot of change happening in how we can deal with this long-term care issue and how we can prepare for it. And I think it's only going to get better. So rather than wait until the event happens, which in many cases, not in all, I'll give you, my last example will be this one. But in many cases, if you prepare ahead of time, you're going to save yourself an awful lot of financial heartache and spiritual and family heartache with having to deal with a crisis issue that you didn't plan or prepare for. Sometimes I get the question, well, but, you know, my mom's already in a care facility. We're concerned that she's going to run out of money, and she's really in poor health. We really can't do anything. Well, yes, you can. The industry has also come up with a thing called a medically underwritten annuity. So essentially, if somebody is in very poor health and they have very few assets left, and you're concerned, excuse me, you're concerned about having to move them out to Medicaid or some other program, the worse their health is, the higher the monthly benefit is paid, because it's paid over their assumed lifetime. So poor medical health means you have a life expectancy that's shorter, which means the monthly check is higher. Many people, like Doug was talking about, you know, the one person who he saw later at Walmart who had recovered and was in remission, that happens. And so that monthly check continues even though the money may have been exhausted that they had in reserve, because the insurance company has a contract to pay that continually for as long as you live. So even folks that you may consider uninsurable, there's still one or two options available to help in a situation like that. So we're happy to answer questions, and I feel very passionately about this stuff because of personal experience and so forth. So come by, we'll hand you the mind map that'll help you, and we're happy to answer questions and so forth. But get a plan in place. Don't procrastinate. Thank you.